In today's video, I will show you how the DR trading strategy not only provides a statistical edge in the market, but can also help you identify the direction that the algo is currently pricing to with a very high probability if you combine all the basic principles that I teach on this channel. As an example, I will go over last week's price action from Euro in Wednesday's overnight DR session and step by step explain how you can spot lower probability conditions and even prevent yourself from taking unnecessary trades that might end up being traded into the wrong direction, even if it doesn't seem so at first. First of all, it is important to understand where price is coming from, so you know with a higher probability where the algo is currently pricing to. For that, you access some older defining range levels that align with the current price action. Make them easily accessible to toggle on and off when needed. Back to the current price action. We can clearly see that the aftermarket DR session rejects the previous day's regular session lows before it confirms into the short direction and also uses the previous day's overnight session lows to extend into the short direction for almost 5 standard deviations. Turning on all highlighted previous DR session levels again, we can identify with a high probability in which direction the algo is currently pricing to before the overnight DR session has even started. They look a lot like some support and resistance levels that are being often rejected to the tick, huh? The overnight session forms and closes as a green DR box followed by an immediate long confirmation with the 4 AM candle. With the confirmation candle, the aftermarket session lows were already reached and inside of the range there is one open magnetic volume imbalance. Price starts to retrace back into the defining range and shows rejections from the IDR mid. You obviously want to look for longs here, but what is there that should make you super cautious with your target selection and expectations for the session? First of all, the ADR highs are still intact and were respected up until the overnight DR session formed. This indicates that a DR downside model is intact, not really a prolonged confluence. Remember what we've discussed just a few moments before and analyzed where price came from and in which direction it's still pricing to the downside. Now, if you turn on gap imbalances as well, either by an indicator that does the work for you or highlight it manually, you can already see a strong barrier above current price action and inside the current defining range. So, if you're thinking about a trade-off from the IDR mid-rejection, your stop loss should cover the beginning of the retirement setup area and in this case also the open magnetic volume imbalance and gap imbalances. Now the question is, where would you set your target for the trade? Would it be a new high, the aftermarket DR session mid, or even the aftermarket session highs? It's either a new high or maximum the ADR mid. Since a new high offers less than 3R, the ADR mid would be the better play, as it offers 3.3R and is a very crucial point in this DR model constellation. It's the level that needs to be respected for an increased downside model probability. If the mid gets breached by the overnight DR session, the downside model is still intact and can play out, but its probability decreases for the rest of the day. You can also see a range expansion model take place in the regular DR session, where both sides of the market are being played in a trumpet-like price action, and the downside model gets broken in the RDR. The DR downside model is completely broken if price violates the ADR highs, and you should expect a DR range expansion model or trumpet-like price action throughout the day. To summarize it, pay close attention to the ADR mid as it reveals a lot of information for the rest of the day. With all of the things on your chart and what we've discussed already, you can clearly tell that this trade is not only against the overall downside structure, but also has a lot of barriers at important levels. Like for example, the gap imbalances located at the new high and also the aftermarket DR session mid and this cluster of previous DR levels. Fast forward, price pushes higher and stops right at the aftermarket mid in combination with the gap imbalance and a previous DR level. It's not willing to go above and the overall DR downside model structure holds for the rest of the day. I covered this ADR to ODR constellation now many times, and this is again a friendly reminder to always trade a setup like this with caution. If the overall structure hints toward the downside, like in this case, be very selective with your targets. Study previous DR session levels as they might give you more information than you probably think. For those of you that enjoy the historical data part, for this exact setup, EuroFX futures with a long confirmation on Wednesday's overnight DR session with the 4 a.m. candle, there's a 67% probability of the DR session not to close below the opposite side of the DR. Please keep in mind that these stats are just for the Wednesday 4 a.m. candle confirmation. Every next 5-minute candle confirmation has different probabilities. If the session turns true, 50% of maximum retracements should be done by 5 a.m., and more than 70% of the maximum retracements for the session were above minus 0.2. Many times in the past with a 4 a.m. candle confirmation, price reached only the plus 0.5 to 0.59 area, and most of the times 1.5 to 1.59 standard deviations. So even historical data insights would give you a clue not to take this trade, or at least expect a strong rejection after hitting 0.5 to 0.59 standard deviations. In this example, 0.5 to 0.59 aligned with a massive barrier for price with multiple previous DR levels, a gap imbalance, and the aftermarket session mid to be broken. Absolutely beautiful. Thank you guys for watching, and if you're serious about trading and want to learn much more about the DR trading strategy, then feel free to visit M7DR.com. Have a good trading week, and I hope to see you in the next video.
We're gonna take on the world.